analyst at Systematix, now joins in. Vishal, Ekta has explained to us the pros and cons of CIPLA as an asset being with either Torrent or Dr. Reddy's. As per the analysis that Ekta has put out and what the brokerages say, it may be a better fit for Torrent as of now. What are your thoughts, and do you think that there could be some other players as well for whom CIPLA would be a good fit?
Torrent obviously has the advantage of a higher promoter stake, which we can dilute to kind of raise resources to fund this acquisition. Besides a larger promoter stake, they have an experience in executing a number of domestic transactions. So they have been one of the they've done the most domestic transactions so far among the Indian names. So that goes in favor of Torrent. Only concern being here is Torrent doesn't have experience in managing US-based facilities, and that's something Torrent will have to ensure that they remain compliant to the manufacturing regulations. So that because what we are witnessing now is large amount of cash flows that will be acquired will be coming from the US, and if anything goes wrong in the US, you are extremely leveraged. You have high financial leverage, and US is a high operating leverage business. So both the things going wrong will be a difficult situation for Torrent to be in. So I think it's a great transaction. But it comes with its own risk. Strategic maneuvers is something companies will have to opt for in order to create value out of these transactions, while they have to take this large risk of financial leverage, which is significant and can play either way for the companies.
So Vishal, the problem, of course, as we have discussed multiple times, and Ekta has also pointed out, is that for Torrent, the debt component will there'll be a high debt burden, right? Even if you assume this $4 billion of incremental debt, the net debt to EBITDA for Torrent would be over 4 times. How much of a concern would that be for you? And what would the impact be on the stock?
So as long as things remain smooth, the financial leverage is not a concern. But as we know, pharma sector is known for its volatility in terms of earnings. And that volatility is usually triggered by regulatory changes and regulatory inspections impacting exports from India to the US. So these are two variables that can come suddenly and really create havoc. So it's best to avoid high financial leverage. I would always so such a transaction is best executed using as much equity as possible. So the key risk is basically, I think, regulatory reforms impacting cash flows and manufacturing compliance issues. So that remains the key risk for taking a high financial leverage.
Okay. Vishal, wanted your thoughts on how this Revlimid generic opportunity would play out. While it is only for the next 2 fiscals odd, what are the dynamics for the companies, considering that CIPLA is also selling Revlimid generic? I think Torrent Pharma is in the fray. Dr. Reddy's has a good hold in the market. How important an opportunity is it, and what are the dynamics?
It's very important, actually. If someone is acquiring CIPLA, the Revlimid opportunity needs to play out as it has been. So far we have seen Revlimid playing out above expectations. So whatever expectations were pending for FY 23-24, most companies have actually outpaced expectation in terms of delivery. And if it continues to kind of play out the same way as it has happened so far, we think a lot of the financial leverage problem can be addressed using Revlimid cash flows.
Okay. All right. So would that be one of the key points for an acquisition by, say, a Torrent or as well as a Dr. Reddy's to basically close in on a CIPLA acquisition ahead of the Revlimid opportunity sort of subsiding? And secondly, what would it mean for India as a whole for either Torrent or Dr. Reddy's coming in? How lucrative is the CIPLA India business for either of them or both of them?
I think India business is what differentiates CIPLA from all other companies in India. So they have got one of the best respiratory franchisee, which is a high entry barrier business. So normally brands generally have the entry barrier of being a brand, but respiratory generics have 2 entry barriers. They are also difficult to manufacture. So so that gives them kind of a very strong domestic franchise, which everyone aspires to create. And Dr. Reddy has been kind of ambitious about building a domestic franchise, large domestic franchise, which they haven't been able to build so far. So for Dr. Reddy's, this is even a more attractive deal to kind of close their ambitions around creating a large domestic business. While Torrent has been kind of doing a smaller transaction and scaling up their domestic business, and they have also been very strong at execution. So as far as execution goes, I think Torrent may be able to kind of do the best out of the transaction, while Dr. Reddy's track record around execution of a domestic branded business is not so great. So while this is attractive for Dr. Reddy's, but whether they'll execute it is the key challenge.
Okay, all right, Vishal. Thanks a lot for explaining that to us and talking about, everyone who's in the fray to buy this asset, that is CIPLA, right? Torrent putting in a non-binding bid. That's an exclusive story. But let's do one thing. Let us take a break on that note.